Okay, welcome to this month's market report. We're going to discuss in detail what happened in April of 2023, compare it to the last 12 months and ending in April of 2022, so year over year. So we're going to get into detail with that. I've got an exciting new way to explain this, so hopefully this will be a visual presentation or method that really helps to understand what's going on in the market. And we had some really good news today as with regards to interest rates. So we've got a lot to talk about in today's market report. So first, let's get to the interest rates. So the CPI came back today, the report, and it came in at 4.9%, which is lower than was expected. So they are expecting the Feds to potentially pause on the raising of interest rates, which means that the actual interest rates that we experience will be coming down. And this could lead to interest rates getting down into the fives by summer, which could really cause an increase in activity in the market, because a lot of the market activity, as we're about to see right now, is being driven by decreased inventory. There are a lot of buyers that are sitting on the sidelines right now because of the interest rates being too high. And there are a lot of sellers that want to get out of their houses, that want to move, but they just can't let go of a 2.5%, 3.5% interest rate and get a 6% interest rate. But a lot of sellers are starting to adapt to the new reality that, those were old interest rates, and that to get into something new, 5 is starting to feel comfortable. So a lot of people, we expect when the interest rates get into the mid-5 range, that a lot of sellers will actually be willing to start putting their properties on the market, and inventory should be going up as these buyers come into the market. So we should see a huge increase in activity that starts to occur. This could occur as soon as summer. So what does this mean, just before we get into the numbers? What this means for buyers is your interest rate may be a little bit higher right now, but if you see a property that you like right now, you may want to jump on it, because there's competition right now. Things that are fairly priced for their condition on the market are having a lot of competition, but they're battling 2 and 3 and 4 offers. They're not battling 15 and 20 offers like they were back in before the interest rates started going up. Once these rates come back down, there are so many buyers that are sitting on the sidelines right now that are going to rush back into the market. And what do you think is going to happen to that demand? It's going to go way up. And even as supply increases, demand is going to go higher. So you're going to end up in a lot more competitive situation. So you might get a lower interest rate, but you're going to end up paying a lot more for the property. So this could be a little bit of a window if you're thinking about getting into the market and you're just waiting. You might want to jump now, and then maybe you can refinance sooner rather than later. So just food for thought. And if you want to talk about your specific situation, so we can talk about potential cost differentials and so on and so forth to see what makes sense for you, please feel free to reach out to us. I'm happy to go through a cost analysis with each individual person. Same thing on the sales side. All right, so let's get into the actual numbers of what happened, and see what April of 2023 was compared to April of 2022. Okay, so first number we're going to look at is the number of new listings in April of 2023. We had 228. In April of 2022, 485. So huge decrease in listings and inventory. Again, this is what's driving the strength of the seller's market right now. And you're going to see that with this graphic representation I'm going to kind of navigate with you. Number of sales. So these are the actual number of transactions that occurred. In April of 2023, there were 329. In April of 2022, there were 329. In April of 2023, there were 154, so less than half. So that's a 50% decrease in market activity. And that's what we're seeing a lot in what the media is reporting, is that the real estate activity is down. And they're saying this based on market activity. So does that indicate price drops? Well, let's look and find out. Okay, so again, our number of sales or market activity is down significantly. So we're going to mark that here. So April 2023 versus 2022, market activity, number of sales are down. Oh, it's a horrible circle. Anyway, here's my circle. All right, so we know that, okay? Now let's go back to some more numbers. Days on market. April of 2022, 24 days on market, okay? April of 2023, 23 days on market. So it's pretty much the same. So there's not a whole lot of difference there. Here's the key. Months of inventory. So months of inventory is calculated by taking the number of properties that are on the market divided by the number of sales that occurred. And if that activity continued with the inventory that's on the market, how many months would it take for us to get down to zero? So a neutral market is somewhere between 5 and 6 months of inventory. A seller's market is anything below 5 months of inventory, and a buyer's market is anything above 5 months of inventory. This is supply and demand. So if it's 5 months or below, then what that tells us is that demand is higher than supply because there's less than 5 months inventory. If it's 5 months or above, or I'm sorry, 6 months or above, that tells us that supply is higher than demand, so that there's more inventory. That's why it's a buyer's market. So if you look at months of inventory, April of 2022 was 3 months of inventory. April of 2023, we are still in a seller's market. We've been in a seller's market this whole time, except for January, which is not uncommon. January, February sometimes can jump up, but this January we were right here. February 2023 was a little bit weird. We were at a little bit of a neutral market there. But January 2023, that was in that window where interest rates were still kind of getting settled and they were trying to figure out what was going on. So 3 months of inventory. So what does that look like with regards to our visual graph over here? Well, we have, is this gonna work? Okay, we're down here. So we have 3 months of inventory. So that puts us in certainly a seller's market, okay? So what does that mean as far as expected home values are concerned? Well, if we're in a seller's market, we expect home values to keep on increasing with regards to appreciation. So we expect prices to keep on going up. So the key here is this supply versus demand is what determines home market value. Now, here's the catch. Home market value is not sales price. It is not the median sales price. It's not what you're hearing in the media as far as what prices are doing, because they use the median sales price. And we're going to get into that here in a couple minutes. I'm going to explain what I mean with that. So expected home market values you need to expect, because we're in a seller's market, at least for the next 30 days. And I expect for a lot more now that we've had this news that's going to help interest rates, that we have increased appreciation, meaning housing prices are going to continue to go up. Now, we are seeing some sales prices that are coming down on the MLS right now, and buyers are talking about this all the time. They're saying, I see prices coming down, I see prices coming down. Well, what's happening is sellers are seeing the multiple offers that are happening again. They've been unrealistic in a lot of pricing situations over the last 6 months anyway. But right now, because so many properties are going into multiple offers, sellers, if their agent isn't giving them the accurate number for what the value of the house is, or if the agent's not strong enough to tell them, hey, you're not going to sell at this price that you're wanting, and the agent just throws it on the multiple listing service, then that property sits there. And when it sits there, the seller has no choice, two choices. They could either let it continue to sit there, or they can start dropping the price. But they're dropping the price, not the market value. They're not dropping market value. They're dropping the sales price, which was too high. They're bringing it closer to market value. So if this is the value of the property and they're listed up here, they have to come down to get to that market value. Whereas if they listed right here, then the buyers would come in, and the buyers, if there's multiple offers, which happens on houses that are priced right, that market value actually goes up because there's more demand versus supply. It's all about supply and demand. When they're up here, there's no demand, so they have to come down. So that's the difference between market value and median sales price, which I'm going to again explain median sales price in just a second. Okay, so that's months of inventory. Now, median sales price for April of 2023, we're looking at 1.17, April of 2022, 1.090. So it's a little bit higher. Okay, so we are up year over year, April 2022 versus 2023. There has not been a drop in market values. There have been drops in sales prices, and so on and so forth. I'm not going to go through that again. So let's talk about median sales price for just a second. So median sales price is basically, it's the number that falls right in the middle of all the data that's collected. So it's a good idea when you're looking at large samples of pricing, it's a good idea to use median sales price because it gives you a general idea, and it doesn't get skewed by really, really high numbers or really, really low numbers. It's just what fell right smack in the middle. But the media uses this to say the market is crashing. Number one, they'll use market activity, and then they won't say it's market activity. They'll say that somewhere low down in the article to try to just get you to click on it. But then they also, if prices go down, they'll say huge price drop, market values are dropping. When you read the article, it's like 0.7%, even though appreciation's been 15% over the last year, a 0.7% in median sales price decrease, and they're jumping all over it, putting it in the media. Well, does the median sales price have any indication on market value? And the truth of that is no. So let's look at this example. We have this first month, we had a $3 million sale, a $2.75 million sale, 1.65, 1.5, 500,000, 350,000, 275, 225, 220, okay? So we had 1, 2, 3, 4, 5, 6, 7, 8, 9. So we had 9 sales. So 4 above, 4 below. The median sales price is $500,000. So month 1, median house prices are $500,000. Month 2, we have a 4.25, 3.5, 3.25, 2.5, 400, 395, 385, 250, 315. Notice that all of these numbers are higher than month 1. Every single one of them. It's just that the 5th sale right here, the one that falls in the middle, is $400,000. So now the median sales house price for month 2 is $400,000. So according to this example, the housing market has declined 20%. So you can see where that is. It's not a statistical fact. It does not mean that if you go and look for a $2.5 million house that you're going to get $500,000 off of that, or a 20% discount, and now it's going to sell for $2 million. It simply means that the purchasing range of things have changed. So when interest rates went up, people's buying power went down, so their ability to buy more expensive properties, they're going to start moving into lower price properties. So that median sales price is going to come down. So let's say the median sales price dropped in that example to 10%. That doesn't mean that if you go and you were looking at a $500,000 house, you're going to now get it for $450,000. It just means that you bought a $450,000 house for $450,000, $450,000, because that's the price range you were shopping in. The market value, the actual value of the property, did not change. It's the buying pattern that changed. So I hope that makes sense. So when you're looking at median sales prices, and when you're reading articles about the world is falling, the industry, the real estate market's crashing, you cannot look at those numbers and know what they mean, what they're actually saying. You have to look at it on an individual basis. You can look at neighborhoods and you can see, okay, are values going up or down in a neighborhood? And you can tell that by the prices, like the actual prices of houses, the actual market value of what a buyer is willing to buy and what a seller is willing to sell for. That is the market value. Okay, I hope this makes sense. All right, here's another example. I'm not going to go into all of it, but same thing here. Market declined by 50%, but there is no market decline. Everything is still the same value. It's just that there was a bunch of $1 million houses because, okay, so this is the example. Sorry, kind of jumped ahead of myself there. So let's say the first month interest rates are normal. So you had a couple 3 millions, a couple 2 millions, a few 1 millions, and then the next month the interest rates went up, so people's buying power went down. So instead of buying some $3 million and $2 million houses, they went out and bought a bunch of $1 million houses. So now the median sales price for homes within a 1 month difference would be 1 million versus 2 million, because this was the 5th and this was the 5th. So that's a 50% market decline. That does not mean that a $2 million house is now only worth $1 million. It means that people were buying more $1 million houses. Now, might we see a decrease in value in a $3 million house because people aren't buying that? It's possible. But might we see an increase in $1 million houses because there's more demand there? That's very possible. So you really can't use median sales price to determine market value. Okay, I hope that makes sense. All right, so what does this mean for the market? What's been going on for the month of April 2023 over April 2022? Market activity was certainly down by over 50%, and the media will be all over this, or would be all over this, saying market activity is so slow, the real estate market has slowed to a stop, whatever they're going to say. But all that means is just there's not as many sales. But even in a down market, quote unquote down market with less activity, it can still be a seller's market because demand can still be more than supply. And if it's still a seller's market, even in a down market, you can have increased market value, increased appreciation. So all the buyers that are sitting on the market, I got a cat just jumped in my lap. All the buyers that are sitting on the sidelines right now, waiting for interest rates to come down or waiting for prices to come down, they're not coming down right now. And with what just happened with the CPI report, it doesn't look like they're going to be coming down for a long time. It looks like we actually might be moving back into one of those crazy stronger sellers markets. Okay, so we'll keep an eye on this. Again, watch our weekly market report so you can get an acute view of what's going on, and then we'll do this monthly summary every month so that we can see like kind of a bird's eye view of what's going on. All right, if you have any questions, please let me know. If you would like us to run a data analysis on is it a good time for you to buy or a good time for you to sell, please reach out to us. We'd be free to do that, or would love to do that on a personal level. And we hope to see you on next month's market report. Be sure to subscribe and share. Thanks.